Hi guys, I'm glad to have you on board again. Today we're going to update our scenarios because of course lots of volatility throughout the latest few days. Not to mention the cryptocurrencies have made their decisions around the speculative area we were into and the one we've talked about into the latest weekly update. So we now have a market top on place and we'll go in a range for as long as necessary, and we're not going to manage this until further notice, but we're going to talk about what to do until then. Okay, when it comes to other market classes, specifically the stock market, the one I care about the most, still very fucking noisy. Of course, yesterday, Jerome Powell just came out of nowhere and tried to save the dip. Once again, everything is under control. The Fed will do whatever it takes, whatever. Okay, so the thing is still the same. The market doesn't want to sell because we don't know where to go. We fear of inflation. We don't really know how much, and it seems to be under control when we listen to Jerome Powell. So it's really all about that. The market doesn't want to go down, and we can clearly see it as the way people trade the WTI. We have in here a clearly fuckable market, and there is hardly any other way to put it into motion. We are breaking both resistances and support, and the market is going cyclical with a bearish momentum, which I don't like at all. That's clearly the evidence of an expanding wedge structure being at play. Many options out there, because of course we could start contracting the momentum and building some kind of a diamond structure. We've got everything we need to build this. Very low volatility to jump in, multiple time frame trends terminating into the nearby area, because just like the head and shoulder, these are reversal patterns that definitely have to terminate trends on the higher time frames. The daily must be terminated or must be into a daily or resistance area, which we totally are. The question is still, what the fuck are we going to be doing out there? I sold the third range boundary the other day by anticipation because I simply didn't want to stick in front of a computer. So I anticipated the signal, and basically that has been an immediately taken down stop loss. So first attempt for me, and this is going to be the last one. I still have my bearish exposition for these trades, which means I'm still in with a fairly reasonably shitty entry price, and I'm still questioning whether or not I am in a dumb washing machine structure, or if whether or not that fucking thing will actually manage to reverse, which it is supposed to do. And I'm just waiting for appropriate information to efficiently trade this thing because it looks so dumb to me. But anyway, this is my asset of the year, so remember that my plan for WTI is to buy the fucking thing, but to buy it into much more attractive prices. The reason why I've put it a speculative short selling activity first, to try reaching out to the area in which I'm willing to buy. So I'm actually selling with tiny position sizing to bring a little bit of money on board so I can buy with these gains. So these gains could pay for my bullish stop losses. So selling to buy is something that only professionals can do. This is a risk management structure. This is something that only risk managers can do. So remember that the plan for WTI is really to buy it that year. So if you're stupidly selling it because it's rising too high, oh man, I am doing it for a very clear reason, and I know how to do it. And even knowing this, I'm currently into quite of a loss, meaning that I'm trying to pay for my stop loss, and that will eventually cost me a stop loss itself. So I know how to handle these things. I know where to cut down the loss if it goes out of control. You probably won't. So remember the major elements for this. This is a scenario for experienced traders only. Don't jump on board if you're not prepared for it. Okay? So all the elements I have right now just suggest one more thing. For those who are on board for looking the reversals of USD WTI, must be experienced traders only. The only thing I can tell is when these types of structures shows up, which means you have a totally contradictory signal. The market keeps going up when all of the signals start flashing red, and you have signals that suggest it is an unconventional area of price limitation. Well, when you have that, don't be dumb. You need to be real patient and to understand that this market isn't going to be normal. It's going to be an odd market price action. So whenever things go out of control, you know how complicated it is already to look for reversals in the market. Just what's the fucking point of putting additional level of risk taking into an asset that we're not even looking at selling? So I'll be rational in here. I will definitely go back into short selling this thing if and only if I've got reliable trading signals in here. I know this range is unconventional, so I'm not going to do anything until I've got a clear and clean structure in front of me, but most importantly, nothing until we break a support. My job is to sometimes anticipate the market so I can profit from beneficiary risk-reward ratio, which is exactly what I like to do when I do reverse trading, but this is basically not working in here. So when something is going negatively risk-reward ratio implications, just stop doing it. The goal of trading is not to be right or wrong, it's just to make money. And the only thing I can tell you is that in this area, I'm definitely looking at short selling, but I just know how complicated it will be. And therefore, don't go down this road. All right, clear, just simple message out there, rather like to send it. Though the US S&P 500 does quite the same stupid job, it doesn't want to reverse because we somehow don't really want to go against the Fed. This is really the same old stupid Fed put, and the volatility is still under control, or at least looks like it is, but I'm definitely not changing my mind. I'm bearish on the S&P 500 until further notice, and I'm going to short sell more and more as we retrace back to resistances. So we're dealing with resistant prices earlier this morning. I'm going to look for short selling activity and reinforcing my existing positions. Though yesterday has been a lower shadow candle, still suggesting to me that we're going to range in this area for a little while before having the opportunity to reach out validation levels. Okay, we do have taking profit patterns on the daily charts. I tend to believe these ones will validate and probably later down the road push to buying entries. Remember that we've built a head and shoulder pattern in here, and as long as it remains active, okay, shoulder, head and shoulder, okay, we broke the neckline. Normally this structure, when it's validated, terminates time frame trends two time frames higher, so we might be terminating daily moves in here. So if you go to daily chart, that means we're terminating, okay, the latest daily trend oscillation, which is this one. Okay, so we're terminating this after doing this. So the signals I have with this head and shoulder pattern, as long as it remains active, I am targeting the overlap. So this is what technicals suggest. Not buying right now, not selling too aggressively either. It's just slowly reinforcing positions, lowering the stop loss, and reinvesting the maximum 2% risks. For those who are going for reversal trading, once again in here, I'm sorry to say it, but I have to do it all over again. It is for experienced traders only. This is reverse trading, okay? For any other people in here, look for possible third range boundaries, but do not go aggressively reverse trading, okay? And anyway, the point in here is not to actively short sell the market, but to wait for the opportunity to buy the overlapping area more than anything else. So yesterday's buy the dip situations on the tech sector, oh man, I'm just laughing out loud. We're far from being over, and the tech sector has a lot more losses to pile in, okay? So we'll see all about that. This is not the end of the world, but I'm not buying anything until the S&P 500 goes there, which means yesterday, yes, might have been a down day for the NASDAQ, but I still tend to believe there's more to come for these guys. Okay, then finally, cryptocurrencies. Okay, so a lot to talk and a lot to unpack in here. Okay, yesterday, of course, we've had validations to the downside. The context is highlighted by the algorithms, but no signals. So is this a market top? Are we going to blow up the bubble? Well, first of all, shut the fuck up. There is no bubble. There is not such a thing. Yes, the market has risen quite quickly. Sure did. That's the reason why we might want to spend a few months in a boring range trading and just put it simple. You take the last support. Okay, this is the last time we've terminated a bearish cycle. You take the current high points, you put your goddamn Fibonacci's, and you patiently wait for interesting prices to show up. We're in a bullish market, so bullish range is acceptable, which means you can start buying out of 61% retracement. If you want to buy the dip out of yesterday's low point, well, sure thing, you can still do it, all right? I'm not going to do it, because I think this is not nearly going to be a divergence. This is hardly actually a divergence. Look at the momentum, okay? We're not slowing down the pace. we actually keep on rising, even though accelerating the pace. So this is not nearly a divergence, it's just a probable divergence pattern that is very freakingly excessive. So if you think we're going to just make this kind of range, I don't know. This is possible, sure thing. We could also do lots of other options. We could do higher low points and then we stick and we accumulate in here before we accelerate. Only thing I can tell is that we're probably locked into the nearby area for multiple days and weeks because we're going to have to digest. So if you think the value is going to increase the way it did, it's probably not going to. We can expect at some point value to start stabilizing around the nearby area, consolidating some supports before pushing higher. So is this an end of the world territory? No such a thing is on the corner for me. Markets are rebouncing pretty solidly actually. So have we made a dip, which is a trend follow opportunity? Well, possibly yes, but I still doubt it. I still tend to believe that the reasonably probable market in here we're dealing with is more like a boring range. We've had to build a range out there and we've broke up, which means I think we just extended the range structure, but I doubt we'll go as far as people think it is. In my personal opinion, going below 40K is going to bring in so many buyers. I don't even think about it. Most importantly, have a look at the volume trend. We're still going lower and lower, still leading me to believe that we're not done yet. Because what I'm willing to buy is when we'll make higher volume than the previous stages. So now I want a market that makes bigger volume than that. All right? So I know it's not yet over. I'm not buying into Bitcoin. Yesterday I've been buying some altcoins that have some good profile. I got into Monero. I've got into AAVE. I've got into Nano. I've reinforced my teller entries out of the 32 level. I actually managed to get below 30, which was totally unexpected. And that's pretty much, and reinforced a little bit of Solana. That's pretty much all about it. So yesterday, early reinforcements, first steps into buying in on some specific assets I previously have highlighted that I wanted to buy. Okay. And others, I still have some cash. I'm still questioning whether or not I'm going to buy BNB or Polkadot. I wanted to see the early reactions. They seem pretty positive at that point, but still hard to figure it out. Today is going to be an important day. Are we just going there today to terminate the day at the lows and keep on pushing? Okay, I don't know. Polkadot, I can barely even see a consolidation out there. So I need a range. I need to see these things ranging a lot longer to actually consider trend following it. So this is more like some assets gave me some opportunities, like overlapping system on this one, reasonable pullback for this one. I just wanted this one anyway, so I bought it when I had the opportunity. I wanted to get into this one as well, so I bought it. Oh, damn it. I bought this one at 300. It's already 25% up. God damn it. Okay, this is rising quick, shithead. Okay, so third range boundaries are down the corner. Okay, so as you can see, we're looking for third range boundary. We're already 61% retracement. We have reasonably bearish signals. They're already closed. So pay attention. Whenever we get into this resistant context, they have fairly reasonable probabilities to reject prices. And eventually, later down the road, some lower low points could be expectable. Okay. So if you think this is over, I've got reasonable probabilities suggesting this is probably not the case. Okay, so I suspect much longer ranges to show up. God knows what the structures they will put into. I don't even think about it. I'm not going to sell the third range boundary, but I'm going to profit take. Okay, so I'm going to limit my risk by profit taking the third range boundary when most of the assets will be in the nearby area. Okay, like Stellar Lumen, still a lot more to go to get to a third range boundary. All right. So as you can see, different assets, different structures. I'm going to wait for most of the assets to deal with their third range boundary areas. I'm going to think about it. Okay, those who make new all-time highs, there's a possibility that some does. Okay, they're far more advanced than the others. If some make all-time highs, then that's just as better as it is. I'm just not going to buy everyone. In my personal opinion, these guys haven't consolidated enough. They have reasonable probabilities to fail out of the previous third range boundary on the lower time frames. So I think this is a resistance level for Polkadot. I'm going to see how it reacts out there. Okay, now that we're in a range, it's really mind your damn business, okay? It's really individual assets to be traded. If you want to have a few clues on how to do this, I'm going to put it real simple, even though this is experienced stuff, okay? Here it is. So with the relative strength, the thing you're gonna be doing is taking the last reference points. So this is November. You study the entire bullish cycle, and you see, you take your reference, which is Bitcoin. You generally take the heaviest market cap as a reference, or a general index like the S&P 500 for stocks, and you're gonna take on the guys that overperform. So Ethereum, IOTA, Stellar, BNB, Cardano, and Doji are the ones that overstate the Bitcoin in this bull run. Those who underestimate it, Litecoin, Neo, XTZ, and there are some other examples. You just guys put whichever asset you follow into this list, okay? And you are able to buy these guys, sell these guys when the market is on a bullish cycle in the range. So when you want to buy the bottom of the range, buy one of these guys, which is what I did, okay? And then when you want to short sell the third range boundary area, sell these guys. This is one way you can arbitrage a sector, by buying the strong guys and selling the weakest by just looking at the cycle itself. So try to buy the second range boundaries only if you're experienced enough to do the shit. The second range boundaries is a trade for experienced traders only. The third range boundary is a trade for everyone, okay? So wait for the markets to reach out their third range boundary and short sell the weakest. Pure and simply, okay? Sell the weak, buy the strong, and arbitrage the range this way, okay? That's how we do things. Other options is to use arbitrage within stocks, within things themselves, by looking at, for example, ETHBTC, who's providing goddamn opportunities. We're back into some supportive areas. We've had range breakouts suggesting that the supports can be bought. And here we are, nice and clean support. So if you wanted to buy some Ethereum using your Bitcoins, yesterday was definitely one of those days to do such a thing. There's probably going to be a rebound, which means I don't know what's next. All I know is that Bitcoin has still some room to consolidate, but Ethereum will probably take on it. So it's still not an immediate action, okay? Remember that. That doesn't mean you have to buy right now. That just means we're in a range and we're buying the trend channel. So in my personal opinion, there's still some room to the downside, but this area is definitely an area in which we can range, and we're in a daily chart. But sooner or later, I still tend to believe that the altcoins, the Ethereum's overperformance is still down the road. Okay, so I'm looking at potentially putting it in motion. I have no signals at the moment. I've got a risk limitation regarding price accelerations, but that means I'm going to look for 4-hour signals, which I still don't have. So if this thing dips a little bit lower, and I would say that there's reasonably probabilities for us to break down this support. So out of the 0.28, I'm possibly even going to consider using my Bitcoins to arbitrage them into Ethereum for a short period of time. Of course, that comes with a stop loss. We must not break the previous low point. So I suggest in this area is an area for arbitrage within Ethereum and Bitcoin. For those who want to play just with the liquid guys, this is one another type of profiting safely with a definite limitation for your risk in a range by taking the heavy guys and arbitraging between them. Other solution is the one we talked about: buy the strong guys and sell the weakest regarding those who performed over Bitcoin, the reference in the latest cycle. There are other options in which you can short sell and buy the dips, okay, pure and simply arbitraging your portfolio, knowing that you are supposed to be bullish, so you just take profit on the areas or short sell to cover the positions. So many options to make a little bit of money in a range without stupidly betting on trend trades. Remember that when you're in a pullback, the market isn't trending anymore. It is still bullish, but the trend is already getting mature. Okay, this is an intermediate maturity step of trends. There is still the final excess to come, but that also means that's not the time for you to be leveraged in the market. The market is going to range. These ranges have a fairly much higher probability to break to the upside, but the gains that comes out of these breakout are going to be limited. Everyone is going to boast for gains within the next possible bullish breakout of cryptocurrencies, when it will be the appropriate time to start locking on the gains. Okay? So think about it. Have a mindset for the next step. That being said, there's going to be plenty of information for today. I'm going to stick with it. Trade safe, trade sound, okay? Think about range trading rather than dumbly going aggressive. Wait for the third range boundaries. And to be honest, that's my most important thing to do within the next few days. I'm going to look for a third range boundary to show up, and then I'm going to look at how the market reacts. If the third range boundary is validating and then retracing to the opposite context, if the third range boundary is broken after validation, if the third range boundary is just squeezed, which means it doesn't even validate, all of those things, the way the market will risk manage the third range boundary area is going to be what I want to see in order to make my own decisions. Okay? Because once again, I don't know shit about the future, and specifically in a range. I'm looking at whatever the fuck the other risk managers will do. They will tell me what they think about the market, and I'll have my personal opinion because of it. No one knows at the moment what's next, so it's not about time to make plans for rocket ships to the moon. It's more about rationally reducing the risk if you have too much leverage on this market, partial profit taking, securing the gains, letting the market digest the previous very irrational market moves, and then probably higher moves and higher prices because we're still trending in the weekly chart time frames. Okay? So patience of the essence. I've warned you for a boring 2021. We started like a rocket ship. It might be about time to cool down for a few weeks and very likely a few months as well. All right. Bye, guys.